I'm happy to have you here. So, good day, my friends, and welcome to my podcast. Everyone deserves a chance. Tonight, I bring you experience itself. I have Senior Director Capital Markets at Marcus & Millichap Capital Corporation, Mr. Robert Damigella. How many years in the trenches do you have, Mr. Robert?
They say a lady never shares her age, so you're probably going to figure it out from there. That I've been in finance and real estate for more than 30 years, and probably financed debt and equity, probably about $2 or $3 billion in my career. Yeah.
Awesome. Just to make a parallel real quick right here, I started in December of last year. I'm not even a year celebrating into multifamily space. I've been in real estate for 20 plus years. I've been building Manhattan, a lot of construction, a lot of stuff, a lot of deals going on, but nothing at this magnitude. Now I'm still getting my education. I'm street smart, let's put it that way, except the books that I have behind me that I've read, and I'm still working on developing myself on this part. Let me read you guys real quick a summary, and it's not going to make justice. I know I'm just going to read it real quick because I really want you to know who we're talking to. Vice President of Capital Markets, right? Marcus & Millichap. I'm talking about this because it's one of the biggest companies I've heard. I don't think I know bigger companies doing good volume.
Publicly traded company. Yeah.
Absolutely. So 30 years in finance in real estate on Wall Street, Main Street, and I love that part right there. Financed approximately $3 billion in debt and equity over carry. That's an unbelievable number right there. 100 million hedge fund manager, mortgage assets, founder real estate investment firm, AmericaVest Capital LLC, founder and CEO of Finance Insider, a leading multifamily coach platform. And you graduated Northwestern University, right?
I have an MBA from Kellogg. Yeah. Yep.
Yes. Thank you so much for giving us your time. Like I said, some of my followers are people that are newbies. Some of the followers are people that are in trouble right now, especially with the markets they purchased in the past 3 to 5 years. And some of the people are just curious bystanders, I call them. They didn't pull a trigger. They're not into syndications already. They are getting their feet wet, learning step by step what a syndication is. And my mission here is to educate and translate while I'm showing through my personal journey.
Okay. Absolutely.
So, it doesn't do any justice. I don't have any more intro for you. Can you please tell us a few things about yourself?
Sure. No, thank you, Silvius. And I want to tell you something. You're gracious, and I'm honored to be here and share with you the information that I have. And your podcast is give everyone a chance, right?
Absolutely. That's exactly the point. We're not monetizing any way, shape, or form, and I'm very proud to say that. This is an educational platform.
Okay, so I can tell you that I'm always to give everyone a chance because I know where some of your folks are starting in a place which is really difficult. They don't know which way to go. Maybe they're interested in building wealth in real estate. And I want to say this is, for me, giving me a second chance because, seriously, you remember the movie The Big Short? It was about the subprime meltdown, right? Okay.
Oh, yeah, absolutely. Yeah.
So if I focus on that section of my bio, $100 million hedge fund manager, at that time when the Big Short occurred, when the subprime market crashed, I was heading up that $100 million hedge fund in which we invested in mortgages, whole loan mortgages, pre-securitization, and we did workouts. It was distressed debt, and that's how we created returns. But long story short, when the subprime market melted down, so did my hedge fund, so did my own net worth, which was in the hedge fund. And not only did I watch the movie, as you did, but I experienced it one-on-one. I had to shut my fund down, and literally the losses were astronomical. We lost Lehman Brothers. We lost Merrill Lynch. How many major financial firms had catastrophic meltdowns, including my own? So where am I going with this? Where I'm going is that I ended up living on credit cards with 2 teenage daughters. I was a single dad trying to make ends meet. And all I had was my wits and my experience in finance to be able to dig myself out of this, okay? And what I did was I started to identify investment opportunities that I could acquire, and literally using the strategies that I employ and that I learned over 30 years. In my very first transaction, I made $1 million with other people's money and made great returns for my investors, and I still own those assets today. So What I'm getting at is you have newbies here, people that are starting out, that don't know which way to turn. But at the end of the day, it really all is about financing real estate. Because if you can't finance it, if you can't drive a car, you got a nice car in the driveway, but you don't know how to operate it, doesn't do you any good. If you find a great piece of real estate, but you don't know how to buy it, you don't know how to finance it, doesn't do you any good. So I'm here to share with you the knowledge and experience that I have learned over my years that hopefully can help folks on this call to make the next step in moving their net worth and their goals.
On a short note, thank you so much. But on a short note, in the single family space that I've been operating for almost 20 years, the sophistication of an investor comes in when you know how to structure a deal, how to get your money, how to get around the deal. Sometimes I bought very high. I had 11, 12, 13, 15% interest rate, and I needed the money so I can close on the deals. I knew exactly what I'm going to do next, that I'm going to refi next month or in 2 months, and I'm going to drop it down to what I need. That was my entry level position. And that was what I was doing in the single family space. In the commercial space, it's a little bit more complicated. It actually gets a lot more complicated because now you depend on the investors. You have to find the people, the family. If you're looking for a bigger deal, you have to structure the deal in a certain way if you're doing it. And it could be structured as a syndication, which I speak a lot about because I am part of Legends Equity Group. And here's where I'm pitching in my community. The people that I work with, the people that made me a general partner into my first deal was Alex Lovely, and you met him. I want to know, what is your syndication? What are you working? Because I know you're doing them both right now, right?
Yes. Yeah. What I do is I acquire and finance real estate. I finance for clients that are just out there in the world buying real estate, and I advise them. And I also run Finance Insider, and I also acquire through AmericaVest Capital multifamily properties, which I syndicate. And effectively, it's right. It's pretty. So it's I'm a busy guy.
Your boots on you're real, you're legit. You're not the banker sitting down and just writing notes. That's what I want to emphasize here. You're the guy actually closing deals and doing deals, just like everybody else.
I'm in the trenches, Silvius. I closed a week ago a $14 million multifamily transaction, not for me, for one of my clients in Mystic, Connecticut, which was the largest transaction ever in Mystic, Connecticut, called Factory Square. Any of you can look it up. I did the financing on that deal. I do financings. I'm closing one tomorrow, closing one next week, all for my clients. So I'm in the trenches every single day, financing for clients, financing for myself. The syndication part is really interesting because if you understand how to structure that and you can do it properly, and you can do it obviously legally, because there's some legal ramifications, as you well know, 506B or C structures. Okay. But if you can do that, you can really acquire some terrific assets, and you can work with investors to create returns for them that make them happy. And at the same time, set up yourself for some terrific returns and really to be able to build your net worth. So it's a great way to invest. Syndication.
Yes, thank you so much for bringing it up. Yes, that was my avenue. Now I hear a lot of people talking about the funds, like all these things, which I'm sure there's the time to smell the roses, I say all the time. There's a time to learn. That's that steep valley that you have to go through. And then as you grow older into a more sophisticated investor, you learn all these avenues, and funds comes in, as far as I know, 25, 30 years of experience. People that are running businesses like that, they're turning them into funds because they can. That was the first explanation. You got to be sophisticated in order to move that route. And there are a lot of people out there, a lot of help along the way. But again, the Security Exchange Commissioner has to have a fair share to say in it. So you got to learn the laws before you move anywhere, you do anything. Now, as far as I know, I've been listening and I've been following you around for a little bit. I was in a call about a week ago, and you are talking about something very interesting. I'm a Cardone guy. I pick and choose my battles with Cardone. I don't resonate 1,000% with him, but I'm next to the club. I'm not part of the club because I choose to go into the lower version of it. I'm right there. I'm friends with the people that are the doers of Cardone's club, like Mike Bailey's, like a few other people that I know directly, and they're closing deals all the time. And I heard about the rules, the 3 steps pretty much that Cardone is imposing on these deals. And we've been talking about them from the very beginning since I started it. Finding the deal, everybody says you don't have a deal, you don't have anything to talk about. So finding the deal is the number 1 step. That's where everybody gets concentrated. The second step, which I find it very interesting, is finding the debt. What do you send to the lenders was one of the questions that you were saying. What do you send to the lenders? How are you presenting in front of the lenders? How do you find the debt? And the last one is finding the equity. And I've seen it the other way around. I've seen a lot of syndications finding the equity first, and I don't know if they stumble across it or that's how the deal was structured and that's how they started. But I've seen it plenty of times in these deals, and I'm part of one of those deals that took a lot longer than expected because we were losing the lender across the way. Keep losing it. And it was a bad position to be in. It was a huge learning curve. We appreciate it. We take it as a learning curve. But I know you are teaching this.
Right.
So can you walk me through, because we had this conversation off screen like a minute ago. Can you please walk me through?
Yes, I'd be happy to. I can opine, by the way, also on your funds question you mentioned, but we can go to that at a different time. But let's talk about that. First of all, yes, Grant Cardone has 3 steps, and he's absolutely right in the way he portrays that for investors. First of all, one of the reasons why I decided also to start my company and teach financing was because the first step, and I don't want to minimize it, you're right, without a deal, there's no deal, right? But it doesn't take any specific skills necessarily to find deals. And what do I mean by that? Silvius, you're a very personable guy. So if you decide to work hard, call a lot of brokers, get on some mailing lists, take some of them to lunch, get to know them, guess what? You'll start to see deals. There's no skill to it. That's hard work and maybe being personable, and eventually you'll get deal flow, okay? But sourcing debt and sourcing equity and understanding how to, once you get that deal, how to structure a deal and the kind of debt you need, because there's permanent debt, there's bridge debt, there's Fannie and Freddie agency debt, which one makes the most sense, how to do, that's truly an issue which you need to understand how to structure a deal, okay? You know, what debt to use. And then thirdly, the equity comes along. I've raised millions and billions of dollars of equity in my career, okay? And Grant is right. Do it the way that he suggests. And I'm going to tell you why. Yes, you probably lost your debt sources along the way. And that's because you weren't necessarily properly lined up with your equity, who to go to, or had good relationships. Equity is all about relationships. Equity is all about trust, okay? Somebody's giving you their hard-earned money, so it's all about trust. And understand this. You're going to take a deal to a lender. Let's start with step 2. And you're going to bring him a deal, which obviously you've done your homework, I hope. It cash flows, it debt service covers. And I don't mean to use terms that people on the call don't understand them, but these are the internal metrics of a deal that a lender looks at. And it checks off all those boxes. He may give you a term sheet, right? Somehow, maybe you've got good financials, or maybe a co-GP's got some good financials, and he'll give you a term sheet. So now you've got step 2 effectively done. You have your term sheet, you have your debt in place. Would you not agree?
I totally agree. Yeah, that's
okay. Okay, you got to go to closing, and there's more to go, but you have your debt lined up. Okay. I think it has to do with the way that you portray the deal, because especially if you're in the process of getting the debt approved, you're going to get an appraisal. You're going to get all those things done along the way. So now you go to your equity investors and you say, and this is important, how you present this deal, okay? Hi, Mr. Investor. I have this 50-unit, 100-unit apartment complex. Here's how the projected waterfall is going to work for you as an investor. You're going to make 12%, 20% on your money, whatever the number is, with a pref rate of 5 or 6 or whatever. These are only fake examples, but examples. On top of that, we have all the financing in place. We're almost nearly improved. And oh, look, I just got the appraisal back, and it already appraised out to where we're buying this deal. Would you like to put 100,000 or a million or whatever the number is into our deal? That's a much different conversation than we have a deal under contract. We don't have any debt yet. We don't know where we're going to get the debt, but we think it's a great deal and we'd love you to put money in. And that's where I think that Grant is absolutely 100% right. And that's how I do my deals. And when I went, one of the deals that I brought to the club, I presented it on the club call, and I went exactly through the deal that way. Here's the deal. Here's the debt. Here's is the appraisal and overappraised. I went through all of that data. Here's the projected returns for you as an investor. Grant said, that's a no-brainer. I had 10 phone calls within 5 minutes and completed funding that deal that quick. That's how you do it. And that's why you do it in that way. Truly.
Yeah, that's good to know because I'm going to end up on that table soon. That's like inside info right there. Yeah.
All right.
No, I totally agree with you. And this comes in play when you are a little bit more sophisticated. And why am I saying this is because when I got excited about a deal, I think I got excited about it totally different reasons. First of all, my deal was in Vegas. I love the location. I was thinking temperature, partying. I go to a lot of conferences. I'm a young guy, but I had to do some of my own investments because I've exited a single family home space. So I was just looking to park some of the money so I can protect myself a little bit on the tax situation towards the end of the year. So I jumped the wagon and I jumped into the commercial space.
Right.
But it's not something that I just want to bring it to reality. It's not something that I've decided to go on a conference on a Monday night and I paid $1,000 and I joined. It's something that I've been around for 20 years. I've seen these skyscrapers in New York City getting up, and I wasn't able to sit down at the right table. When I was asking people, how do you syndicate? How do you put a deal together? How do you come? There was no internet back then. There was no Google it and find out. There was nobody, just the actual people walking into the closed door meetings. So now for me to have the opportunity, like I feel Grant Cardone is Robin Hood for me, just because I participated in some of these eye-opening events for the past 6-7 years, where he's openly talking about all these deals, structuring and what's important and why not. So to me, it came like a buildup. It was a single family home. It was watching other people doing it. And then all of a sudden I got into, okay, how about now? Am I big enough? Am I influenced enough? Am I going to be able to associate myself and put all my knowledge at work? That was my first question. And then first thing I did, I hit these syndication models and syndication groups because everybody has their own circle of trust. And I didn't know which way to go. All these groups, they were pulling me different directions. Not to say that I joined 2 or 3 of them and some of them were in conflict with each other. Raising, oh, you can't raise for me if you're raising for this guy. You can't do this. You can't be involved in this deal if you're. So I'm like, oh, hold your horses. I'm like, I don't know my 101, and my 101 was my funding. I'm like, I don't know how do I get my money, man? Forget about all this noise. Like, how do I structure my money? How do I present a deal to get my money? That's when the Michael Blank, the calculator, the syndicator calculator, the CCIM. First thing I did, and I recommend this very loudly. I'm very talking about this a lot. CCIM was the number one for me, accredited place where I got some knowledge, valid knowledge, and common sense, I would say.
Yeah. That's huge, man. I have a little bolt, so that's why.
Don't worry. So that's how I looked at things. I'm like, okay, if Cardone brings street knowledge and he brings all this powerful knowledge, amazing knowledge, like Robin Hood kind of style, I'm like, if there's any other way out there that I can associate myself with that's going to give me that legitimacy of being a syndicator. So when I joined my first mastermind community, the reason why I did it to become a syndicator, I didn't do it to become a GP, LP. I have none of that in mind. What I said to my syndicator, I said, thank you so much for allowing me to be part of the syndication because you don't even know, but you're going to make me a syndicator.
Yeah. And that's also what Grant says, if you remember. He says the number one mistake that investors make, new investors, is that they don't become an LP first. And I'm sure you learned as an LP. You're an LP, right?
Absolutely, yes.
Yeah, you're an LP. You learn the ropes. You understand how it's structured, or you hopefully will. You see the PPM documents. You see all of the placement documents, all of the different documents that you have to sign and so forth, and the accreditation information you have to fill out. Being an LP, I think, is a great first step in any syndicator's career.
Absolutely. Here, I just want to point it out. LP, pretty much you can become in 2 different ways. You can be a limited partner into a deal if you join a fund. I don't think you have to be accredited 100% in all of them. There are 2 different scenarios when you're accredited investor. Yeah, when you're an accredited investor, you are allowed to enter different kind of deals. They're more popular, a lot easier to close, a lot easier to raise for some of these deals. When they're family oriented, they're smaller 5 or 6 B's and C's. that's the difference between them and name. But there's a way where there's the wheel, there's the way, right? So if
Right.
you want to get in and you're not accredited, there's definitely a way. There are a lot of syndicators out there that are allowing you to enter as a family level if you have some kind of pre-existing relationship with the syndication. And if you're an accredited investor, then you got to know what you're doing with your money. That's all I have to say about that. You got to know, you got to judge, you got to have experience into the syndication model if you're choosing to go that route, or
Right.
you have to ask the right people, be in the right circles, and be in the right rooms. Now, I want to ask you a couple of things about these structures that I keep hearing lately. I'm not too familiar with it, but I know the economy is not doing well. I know that the syndicators some of them are in pain, some of them are doing great, but I'm hearing about the waterfall structure. So I was very set. My mindset was like, okay, if you're getting into a deal, you got to have strict numbers, and you're going in with this preferred return at the very beginning, and this
Right.
is the projection, the multiplier for the deal, and that was it for me. I didn't quite allow myself to look left and right and create any more financial room to
Right.
understand how these waterfall structures function. I know you were talking about the waterfall structure. Can you please just tell us more about the structure itself? Like, how did it come to play? It's been around for a while, and
Right.
it's just coming to surface all over again in 2024, or this is what everybody's choosing nowadays?
Yeah, no, the waterfall. A waterfall is the structure. It's literally just how you're going to share profits. And your free cash flow after debt service in a multifamily investment is your profit. Okay. So all you're doing is setting up a set of rules that allow those profits to waterfall through to the various partnered up shareholders or investors in that deal. There's no firm, hard set of rules. One thing that, when I underwrite a deal, and you may remember there's that shortcut underwriting where you just take digressing for a minute, but you take the top line rents and then you take 95% and then maybe 40% expenses. And then you go through it and you figure out what the NOI is, right? Then you take your debt out of it. If I'm looking at a deal on an initial turn and my cash on cash is not 5 or 6% at least, I know I can't pay a prep, because a prep has got to be 5 or 6, right? At least to be interesting. If a treasury is 5, then a prep's got to be at least 5, right? Yeah. Okay. So now the question becomes, what's the back end going to be? What is the exit cap going to look? What's the growth in the revenues and expenses? And will that extrapolate out over 5 years to be enough of a profit to give me an internal rate of return over the course of that deal, so that combined my income and my capital gains turn out to be an internal rate of return which is satisfactory to an investor. I'm looking first. I don't care about the models. I'm looking first to see, will this deal, based on my projections, will it ultimately create enough returns to attract investor money? And those numbers have got to be in the double digits, probably on a minimum basis, 16 to 18% IRR, probably, as I mentioned a moment ago, a 5 or 6% pref rate. There's a lot of conversation these days about folks not even offering pref rates anymore. And actually, in some ways, they're not even that attractive, because, again, if I can get 5 in a treasury, what do I want to do?
Yeah, why would we go for 6? Absolutely, yeah.
Right. But overall, it is only the distribution of profits. Ironically, I think I've mentioned to you that I do coaching, and our next class is Thursday, and we're actually talking about, we've hit the syndication model. We've done all the different things prior to this, capital stack, ratios, things like that, creative financing structures, about 15 of them, but now we're at syndication. So as far as syndication goes, I built my own model. I don't use an off-the-shelf model. Myself, my analysts, we created a model. But the model is basically anything we want it to be. The deal that I mentioned earlier, the first deal that I did out of the gate when I had come out of the meltdown of the subprime, has an 80-20 split, and that's up. Then that's 80% to, by the way, let me back up. It's split between A and B share investors. So my LPs are A shares, and the GP, which is me, is the B share. So it's split between So 80% of the profits up till 10%. So get to 10 it is a 80-20 split. However, it pays a 6 pref. So they get a 6 pref, split 80-20 to get them to 10. And then over 10, it's a 60-40 split. That's it. So at the end of the day, you've got a situation where those numbers, based on the projections, turned into an IRR projection on that deal of over 20% with a 2.5 times equity multiple. So that's the way a waterfall works. Without looking at numbers, that's the best way that I can explain it. But the money waterfalls down, it splits off based on and then it's also pro rata according to your ownership. So if you put 100,000 in, you're going to get those splits based on your pro rata ownership of the equity in the deal. That makes sense?
Okay. That definitely makes sense. Yeah, thank you so much for taking your time to go that route. Tell me more about the class that you're teaching. So I know it's Thursday. I've been on one on Thursday, but tell me more. How do you have a structure and what's the scope? Like, why did you decide to go this route?
As I said to you, I was pretty much drafted into doing a course because I had so many interested parties that said, we really need someone that's going to be able to share their experience and drill down on the finer details, the insider look. Not only do I share just financials, but actual language of insiders, how lenders look at it. We have a module, basically 2 modules per class. It's a 6-week course. And for the first week, we did basically was an introduction. But for example, week 2, which was the second week, we did debt financing for multifamily properties. Now, a lot of new folks like you have on this call, they have never spoken with a commercial real estate lender in their life. And they, in some ways, might be petrified or not have the confidence to be able to actually talk to and ask questions to a lender. So because I'm, like you said, in the trenches, connected to the markets, I had 3 lenders on the call that were taking questions from my students. I had a regional bank, $20 billion bank called Rockland Trust. I had their senior vice president on. I had an agency lender, Fannie and Freddie lending. And I had another lender for a major bridge lender, national bridge lender, who does bridge and alternative financing. And I gave them each 20 to 30 minutes, and they fielded questions. They talked about where the market is, what their product, how their product fits in as a tool, and how an investor has to determine which product, which type of debt fits best for their deal before they go to the lender. And they answered questions. You actually had folks that had never had an opportunity to speak to a commercial to actually ask questions. Well, what are you looking for? What do you look for in a sponsor? What do you look for in a deal, et cetera, et cetera? And we spent 2 hours, and it wasn't intended, but the questions and the time, it ended up a 2-hour, could have gone on another hour, talking to lenders specifically about how their debt works for a deal. And then we're doing equity financing, we're doing syndication, we're doing analyzing deals, underwriting deals. And I would tell you that it's been really helpful, I think, to a lot of folks so far. Rave reviews. And not to mention, we even have a WhatsApp group that everyone can bring in deals and share their deals. They have questions about deals they might be working on. So it's been exciting, and we've really had a great time. And we're doing syndication on Thursday.
Okay, that's awesome.
Yep.
So I just want to ask you, is this like a recorded event that is like a class, a master class that you decide to do out there? If I want to get in and I want to go to the first one, what do I have to do?
We have on a rotating basis. We have another class starting on the 7th, but we will have, as we've recorded the classes, we will have the classes available as a package that can be purchased just as a digital package. But beyond that, there's an opportunity to join the classes that are on an ongoing rolling basis every week. In addition to that, we have a finance club, much like the real estate club for Grant Cardone, where investors bring deals and we're able to look at them from a finance perspective. How's the bank going to look at it? How does it debt service? How does it cover? What's the right debt for this deal? And that's a different argument or conversation, perhaps, than you're having on other calls. This is just strictly on the finance side of the deal. But yeah, it's available. We do a lot of webinars too, free webinars that we don't charge for. We could, but we don't. It allows folks to come in and I share some secrets and see what kind of other programs we have to offer. So,
Oh, that's awesome, man. So what I'm gonna do, I'm gonna take some of these information from you and I'm gonna drop them in the comments and I'm gonna drop them in the description of the podcast. So anybody that made it up this far, if they want to learn more about it, they can click the links in the description and they're gonna be able to go straight to what do you have and what you're providing. I'm directly interested. I'm a small beginner syndicator and that's my mission. My mission is to learn. And just like you said, I did not have that exposure up until now. It's not that it's difficult. You really have to have a deal. You got to know what the hell you're talking about. You just can't go out there and pretend that you are this fundraiser guy or you're this guy that, hey, I stumbled across this $90 million deal because I spoke with a broker, but that's all I know about. All right.
that's
So now that's what I've seen. That's what I've seen. And in the low spectrum and low circles, this is what I've seen. I've seen deals coming up to live just for the heck of the presentation more than for the sake of the deal. So lately, I don't want to say that there are not good deals out there. There are definitely deals out there. It's just, it's difficult to find a good presentation on a deal. And I'm working
it
on
is.
one myself. Yeah. I'm
Yep.
reviving actually, and I think you know this deal that we're working on. Roberto Bezzo, if the name tells you anything.
I know Roberto. Sure.
Yep, he has a deal that we're both working on it. We've been doing it for about 4 months, 5 months now. It came, it resurfaced now because we are able to secure debt. Exactly what you're talking about. Now we're looking in the different direction and it comes to life. To me, because it's a new construction, it's dear to me. I'm used to it. It's what I've been doing. And I want to associate myself on a different level into that deal, but more like into the ownership side of supervision, not on the construction side. I would just give it to somebody to build it.
Right.
It's a new
Yeah.
construction. Yeah, I'm very happy that you took your time, and I thank you so much that you came here. You're explaining us about this, and definitely I'm interested in joining. And I can't wait to get some feedback from one of my guys as soon as I'm going to post this and just bring it to you. Tell us more, like what kind of deals are you involved right now? What are you buying? What's your buy box, let's say, because you're a syndicator just like us now.
Right.
So what's
Right.
your buy box? What's a small deal or a big deal that you're going to look at it if, let's say, a $3 million deal is going to land in your lap? Are you going to look at it?
Sure. Yeah. Yeah. Let me tell you. In fact, I'm presenting in the course last week is an absolutely live deal that I have an LOI out on right now, trying to buy. Now, this is a unique product. This isn't something you're going to hear about every day. It is it's 3.25 million. But 5 units. Boston is a very unique market. We have universities, medical hospitals, the best medicine in the country, the best universities in the world. Every year, 100,000 people come into the city to go to school, to go to the hospitals. The rental market is couldn't be any tighter. There's a shortage of supply. They just reversed or threw out a plan to bring rent control in, and we already have the second or third highest rents in the country. It is unbelievable. So this is a brownstone. It was a row house,
Yep.
which
Yep,
is
I'm familiar with
5
Boston.
stories. Yes. Okay. So I came across. I actually used to own the building. No kidding. Literally 2 doors over. I bought
Wow.
it. I bought it for $650 and sold it for $950 in the late '90s, and I thought I was a real estate genius. It's now worth about $5.5 million. Okay. So I have this property,
That's
which
funny.
I thought I was brilliant, but anyway, I should have kept it. This building has been owned since the '80s by the same family. They're selling it. It's 5 apartments, 3 2-beds, 2 1-beds. The top floor alone is rent would be $5,500. It is vacant currently, so there's no cash flow. But I knew how to structure this deal, and I put it all. I use this as an example with my clients, with my students. Excuse me. Very unique. To really look at it in the easiest, simplest way, I'm paying 3.25 for it. It needs about $50 a square foot. It's 3,500 square feet in rehab work or value add work. It just needs appliances, paint, clean it up. Okay. So I'm in now for that works out to less than $1,000 a square foot, probably about $975. Literally a block up the street, there's almost an identical building for sale for $1,550 a square foot. So it's a 4-cap market. I'm buying it at a 4-cap based on the prior rents. It is vacant. I'm going to get some interim interest reserve to carry the debt,
Correct.
right?
Correct, yeah.
So it's a 4 cap on the prior rents, which are half of what the rents are going to be. I'm going to go in, clean it up, re-rent it. It's going to be no problem to rent, double the rents, and will instantaneously, it'll then be a 4 cap property, all cleaned up, and I will create over $1 million in value that quick.
Wow. So thank you for sharing. Yeah, that's awesome. So
yeah.
There are deals out there, even though we're looking like we're expecting for these huge syndicators to fall apart, and we're going to pick some bits and pieces, but there are deals out there in our backyards pretty much. I moved from PA to Florida. Now I'm in Florida. I lived in Connecticut. I know exactly where Mystic is. I used to go to the aquarium there.
Okay.
So I know the deals in Boston. I used to go there at least once a year for multiple events. A lot of events are going on in Boston, so I'm very familiar with the market. And yeah, I know it's highly educated individuals usually live in Boston. That's what it is.
Where did you go in Boston and stay? Were you near the Prudential or the Colonnade Hotel or the Marriott?
You know where the students are always going, so I was always into the downtown areas. That was my hangout place. That's what I liked about it.
Yep. Okay.
I lived in Connecticut for 11 years, so it was very close. Boston was like, okay, let's go to Boston.
Everyone does.
Yeah.
Yes.
Yeah,
Yep.
It was between New York City and Boston. You want to go to a quiet place, but get the same feel. We're choosing Boston versus New York City. New York City was like crazy. And then I ended up living for 9+ years in New York City as well.
Okay. Great.
Yeah, thank you so much, man. Thank you so much for coming up. I'm sure we should be talking again as these structures are unfolding. Like I said, there's so many different avenues of conversation. When it comes down to debt, we didn't uncover anything. We scratched the surface right now. We pretty much, we just scratched the surface. We're putting it out there that there is an available course that you're having and you're presenting it, and they're real life situation deals like the one that you just described. And I thank you so much for putting it out there for the people watching this.
And I might just add, we are having a short webinar on the 27th of this month. And if anybody wants to attend the webinar, they can just DM me, Robert Damigella on Instagram, Robert Damigella on Instagram, and I can get them a registration, and they're welcome to join us. And we're going to share some finance information, a few secrets from an insider perspective, and I think it might be a great opportunity for you or some of your listeners to enjoy some great information on multifamily finance.
Yeah, that would be great. Thank you so much. Thank you for coming in. I appreciate it. Have a good night. Thank you.
All right.
Thank you, Robert.
Thank you.
Okay, bye-bye.